All right, guys, so you're in the process of buying a home. You've been thinking about buying a home. You've spoken to a lender, you've spoken to friends, and you keep hearing the term FHA loan. What is an FHA loan and how can it help you? Stick around, we're going to talk about that today. Hey everybody, welcome back to the channel. It is your realtor Nick Isgro with eXp Realty here in the state of Maine. As you know, in this channel we cover all things real estate here in the state of Maine, particularly in the central Maine market. If that's of interest to you and helps with your process in the real estate market, I'm going to ask that you go ahead and hit the like button on this video, hit subscribe, knock that little alarm bell, and you'll be notified every time we put out new content. Now, jumping right in here today, I want to talk about this because by and large, a lot of the loans that we see coming through as realtors when we're putting together offers or when we're receiving offers on the sale side is the FHA loan product. But a lot of people who are getting FHA loans don't really have a proper understanding of what it is. Now, I'm not here to give you lending advice. I am just going to give kind of the down and dirty overview of why the FHA loan is so popular and in general, what are the parameters? What is the FHA loan? Now, in essence, the FHA loan is a mortgage loan product that is insured by the federal government through the Federal Housing Administration, hence FHA. It comes in a 15 or a 30-year fixed rate product that is going to have essentially looser underwriting standards than your conventional mortgage. So by being backed by the federal government, they are able to loosen up those underwriting standards so that more Americans, more Mainers can go out and get homes that may not otherwise qualify if they were to only be stuck with the conventional mortgage standards at most common lenders. Now, when we say that the standards are different from a conventional mortgage, what do we mean? Well, let's get into that right now. First of all, your credit rating. Now, with your conventional mortgage, you're going to need to have a FICO score or a credit score of at least 620. The average credit score above that we're looking for with the FHA loan is a 580 or above. Now, there are exceptions. You can have a credit score down to 500, but we'll say what that means in a little bit here as we move on to the next reason that people might get an FHA loan, which is the down payment. With an FHA loan, a down payment can be as low as 3.5%. Now, this is where that credit score comes in. If you have a credit score that is below 580, so that 579 down to 500, if you get that exception, you're going to need a 10% down payment for sure. Other than that, it's going to be a 3.5% down payment. Now, on a conventional mortgage, there are definitely banks out there that will allow a 3% down payment, but most, by and large, are going to be looking for a 10 to 20%, 20% being the most standard on a conventional mortgage, certainly the strongest standard for a conventional mortgage. Now let's talk about loan terms. Like I said at the beginning, loan terms on an FHA loan are going to be 15 or 30-year fixed rate products. So it is going to be a fixed rate. You're going to be locked in when you get it. Conventional mortgage, you could have a variable rate product or a fixed rate product, and it's probably going to fall anywhere between 8 and 30 years. So there is a more flexibility on the term and the rate conditions on the conventional product, but by and large, most mortgages people are getting are going to be 15 or 30 years anyway. Now, as you may or may not know, on a conventional mortgage, if you put less than 20% down, you're going to have to pay private mortgage insurance on that loan. Private mortgage insurance insures the bank of any kind of loss while you're trying to earn that 20% equity into the mortgage, into the home. With an FHA loan, it's important to know that you are going to have a couple of things here. One, you're going to have assessed a 1.75% insurance premium right on the front end. Now, the good news is, because these loan products are typically for people who have a smaller down payment, that 1.75% fixed premium can get rolled into the loan product and financed right along with the loan, so it's not necessarily cash out of pocket. However, you are going to need to pay mortgage insurance premium on that loan for the life of the loan, with the exception being if you have a 10% down payment or more, it could drop off around 11 years after that. But by and large, most people, if you're putting the 3.5% down payment, just assume that that mortgage insurance premium is there for the life of the loan. So what does the application process look like? Now, I'm not here to give lending advice. So you want to get all of the details and the nitty-gritty stuff with your lender, but by and large, make sure you have a credit score of 580 or above. make sure that you have 2 years of employment history and pay stubs that you can have access to, tax returns, things like that, because the bank not only wants to know that you have the willingness to pay, but also the ability to pay. So make sure you have that stuff. You want to make sure that the property that you're trying to finance is going to be used for your primary residence. The FHA loan is specifically for homeowners of their primary residence. So that'll be something to consider. And the bank will want to make sure that the home is appraised by an FHA approved appraiser and that it meets all HUD guidelines during the appraisal process. So some quick pros and cons to the FHA loan. 1, you can have a lower credit score. So if you've had some problems with your credit in the past and you're working on getting through those issues, or you're just getting through those issues, but you really want to break into home ownership, this is going to be a great product for you, and this is why this product exists. Number 2, you can have a lower down payment, and that means that you can stop renting sooner than later. You're not going to have to wait until you get that 20% down payment in order to fulfill the dream of home ownership. Now, some of the cons on the FHA loan. For one thing, you're not going to be able to avoid those insurance premiums. It's part and parcel to the loan. If you're looking for a loan that does not have mortgage insurance premiums, this is not going to be the loan for you. Number 2, your property is going to have to meet the FHA requirements. Now, my experience has been that most properties that you're out looking at are going to meet those requirements. Sometimes the appraiser will get there, and if there's things like flaked paint and things like that, they might submit the appraisal with a list of things that need to get done before the closing in order to meet those guidelines. So even if you don't meet it right on the front end, it's not always a deal killer, but something to think about as you're going into the deal with an FHA product. And the third con I can think of is that some sellers might shy away, particularly if you are in a competitive bid process. For example, if the seller has 2 offers in front of them, one of them is a standard mortgage with a 20% down payment, the other is an FHA mortgage coming in with a 3.5% down payment. In a competitive process, especially in a market like this, where the prices are rising on a regular basis, they might feel more comfortable going with the buyer who has the larger down payment in case there's any issues that come up during the appraisal. Not saying that's going to happen, just saying that it can happen, and it does happen sometimes, and it's something for you to know about when you go into the process. Now that's really it, guys. That's the down and dirty version of the FHA loan. I hope this was helpful to you in the process if you've been thinking about getting the loan, and if you are in that process, please go ahead and drop a comment below and tell me what your thoughts are. Have you ever closed an FHA loan? What was your experience? Give it all. We'll get into the discussion on this video. Other than that, thanks so much for sticking around to the end of this video today. Until next week, see you next time.